struggling video game store became Wall Street's biggest nightmare. Except the people responsible weren't supposed to win. Wall Street had made this bet thousands of times before. Find a struggling company, bet its stock will fall, collect the profit. Simple. By the beginning of 2021, GameStop looked like another easy target. Customers were buying more games online, stores were closing, and many experts believed the company's best days were already behind it. Some of the biggest hedge funds in America reached the same conclusion. GameStop was finished. They bet billions of dollars on it. If they were right, they would make a fortune. Instead, they walked straight into one of the biggest traps in Wall Street history. The strange part? The people who built that trap weren't professional investors. They were ordinary people with internet access. On a Reddit community called Wall Street Bets, thousands of everyday investors started asking a simple question. What if Wall Street was wrong? As they looked closer, they found something unusual. Hedge funds had bet against GameStop so aggressively that if the stock started climbing, they could be forced to buy it back at higher and higher prices. The harder they tried to escape, the more trapped they could become. One person bought, then hundreds, then thousands. Soon, millions of people were joining the movement. Wall Street was following the same playbook it had used for years. The internet was writing a completely new one. At first, nobody on Wall Street seemed worried. Then GameStop doubled. Then it doubled again. Every time the stock climbed, hedge funds lost even more money. To stop those losses, they had to buy shares. But every share they bought pushed the price even higher. The solution became the problem. Trading floors erupted with activity. Financial news channels interrupted regular programming. A struggling video game store had become the most watched stock in the world. Then, just as millions of people believed they had shocked Wall Street, everything changed. Several trading apps, including Robinhood, temporarily stopped customers from buying more GameStop shares. The company said the record-breaking trading forced them to set aside far more money than usual before processing new purchases. Many everyday investors didn't believe that was the whole story. They believed the rules had changed in the middle of the game. The debate quickly spread across the country. It wasn't just about GameStop anymore. It was about trust. Eventually, GameStop's price came back down. Some people made life-changing fortunes. Others suffered painful losses. But the biggest lesson had nothing to do with money. For decades, Wall Street believed it understood exactly how markets worked. Then millions of ordinary people, connected by the internet and a shared idea, exposed a weakness few professionals had imagined. The greatest irony was impossible to ignore. The investors who believed GameStop would disappear helped make it one of the most famous stocks in history. The GameStop short squeeze didn't prove that investing is easy. It proved something far more important. Never assume the future is already written. Because sometimes, the biggest changes begin with ordinary people asking one simple question. What if everyone else is wrong? And that's how